Very good morning, everyone. How are you all? Very fine. Now, now, last class we started internal reconstruction chapter. We completed buyback of equity shares. So we have completed two chapters, ESOP and buyback. Any doubt in that two chapter? If you have done the questions, buyback completed. All the questions completed. All the test your knowledge questions. Really, two questions left. Okay, you have done. Very good. You will do after your marriage. Then you are waiting for what? You are waiting for what? Yesterday? Oh, exams was there. Okay, okay. There are a lot of excuses, huh? Okay. Now, coming to internal reconstruction chapter, let us revise what we have done. Let us first revise. We have understood what is internal reconstruction. We have already discussed that internal reconstruction is a scheme where the company is reorganized without going into liquidation. Without going into liquidation. What is the objective of this chapter? What is the objective of this chapter? The objective of this chapter is to write off all the accumulated losses, all the accumulated losses which have arise due to overvaluation of asset or due to past operating losses. That is the objective. Now to write off that losses, we require reduction of capital. That is the objective of this chapter. Means what journal entries we have done. Means for this chapter, what is the accounting treatment required? So first we have done alteration of share capital. What is alteration? Alteration means changing class of shares without changing class of share without changing बोलो changing class of share without changing paid up capital means face value will change but paid up capital will remain same. So there are two type of alterations. One is known as consolidation of shares. Sorry. One is consolidation of shares. One is what? Subdivision of share. Consolidation means what? To combine smaller denomination shares into higher denomination shares. Subdivision means what? To subdivide higher denomination shares into smaller denomination shares. Means if you take these examples of consolidation, you can see 10,000 shares of rupees 10 each, correct, has been converted into 1,000 shares of rupees 100 each, correct. Means can I say 10 shares of rupees 10 each has been converted into one equity shares of rupees 100 each, but you can see the paid up capital remain same. So of course now you may ask, sir, why we are passing journal entry if the amount is not changed? Means practically speaking, you may also ignore journal entry, practically speaking, because 1 lakh remains same, only there is a conversion of what? Conversion of what? The share certificate. So practically speaking, you may ignore journal entry also, but not in exam. In exam you ignore journal entry, so they will ignore you, correct. So from examination point of view, we need to pass journal entry. But journal entry, old share capital account debit to new share capital, simple, correct. Then subdivision of shares, just reverse of this. You can see higher denomination become what? Lower denomination. The journal entry remain same. The journal entry remain same. Old share capital account debit to new share capital. Then we have done cancellation of uncalled capital. In this, what happened after cancellation? The partly called up shares become fully called up without raising any fund. Without raising any fund means without calling the uncalled amount. Without calling the uncalled amount. So in this case also you can see the class of shares will change, but paid up capital remains same. So once again the class of shares remains, the class of shares will change from 100 it become 80. You can see the face value what was 100 now it become 80, but paid up capital remains same. So journal entry also remains same. Old share capital account debit to new share capital. Got it? Means whatever we have done till now in point number 1 and point number 2, there is no changes in paid up capital, means there is no reduction of paid up capital. Therefore can I say in this, by these two transactions, we are not reducing capital. But for this chapter, we require reduction of capital to write off losses. So therefore, there is point number three. Point number three is for reduction of paid up capital. So there can be two types of reduction. One is with change in face value, other is without change in face value. So whenever it is with change in face value, so we have taken one example where face value of rupees 100 and called up was also 100 but reduced by 20. You can see we have reduced called up capital as well as face value also. It means 1 lakh shares of rupees 100 each now become 1 lakh shares of rupees 80 each and 20 is reduced. So in this case also class changes. Whenever class changes, then the journal entry is old share capital to new share capital. But in this case, there is a reduction, and whatever reduction will be there, that will be transferred to which account? Capital reduction account. Means in this chapter, any gain, any loss, any income, any expense will be transferred to which account? Capital reduction account. So what journal entry becomes share capital account debit? Share capital means old share capital account debit to new share capital, and the difference will be transferred to capital reduction account. Then we have done reduction of paid up capital without changing face value. So you can see the face value of the shares remains same, but there is a reduction. Means in this case, what happened? Can I say fully called up shares become partly called up, but the class remains same. Because class remains same, so there is no need to pass one journal entry old to new. So what will do? Share capital account debit to capital reduction. What journal entry will do? Share capital account debit to capital reduction. Got it? Then after this, there are many other transactions which is related to this chapter. Correct. First, reduction in the claim of liability. Reduction in claim of liability means gain. Gain will be transferred to capital reduction. Liability account debit to capital reduction. In this chapter, just think about this. Loss, capital reduction account debited. Gain, capital reduction account credited. Correct. Then reduction in the claims of debenture holders, it can be of two types, with variation in rate of interest, without variation in rate of interest. So with variation, so what journal entry? Old debenture account debit to new debenture, the difference will be transferred to capital reduction. If there is no change in rate of interest, means the class of debenture remains same, so debenture account debit to capital reduction. Then reduction in the value of asset. Reduction in the value of asset, what generating? Capital reduction account debit to asset. Increase in the value of asset, asset account debit to capital reduction. Correct. Payment of reconstruction expense. So expense will be debited to which account? Capital reduction account. So capital reduction account debit to bank. Payment of contingent liability. If payment of contingent liability means is settled by payment, then once again capital reduction account debit to bank. But if contingent liability is cancelled, then will pass no journal entry. Correct. Then the last point we have done for writing of accumulated losses, fictitious asset and goodwill if any. This journal entry will be done even though not specified in the question, because this is the objective of the chapter. Correct. What is journal entry? Capital reduction account debit to PL, to goodwill, to fictitious asset. Nowadays there is no concept of fictitious asset. It might happen they have not given any fictitious asset in the question. This I am just informing you for the margin of safety, because they may take any question from old syllabus. So previously they used to give some fictitious asset in the balance sheet. So what are the fictitious asset? Expenditure which is not yet written off. Means for example underwriting commission. So underwriting commission, if they have not charged it to PL account, so that will have some debit balance. So underwriting commission will come in the asset side of the balance sheet. So these are the expenditure which is not yet charged to PL. So this need to be also written off. We write off that asset. So that asset is known as which asset? Fictitious asset. Fictitious asset means which have no value, which have no real value. Understood? So if there is any fictitious asset given, we write off that also. Correct? Got it? Then I have given one special note that goodwill will be written off, but if there is some other intangible asset, that will be written off only as per the information given in the question. Means that will be written off, but as per the information given in the question, not entire amount will not be written off. Correct? Then for closing capital reduction account, I said if it is having surplus balance, then surplus balance will be transferred to capital reserve. The journal entry will be capital reduction account debit to capital reserve. But if it is a deficit balance, I said practically deficit balance will not arise. Practically deficit balance will not arise, but if suppose in examination question there is a debit balance of which account? Capital reduction account, means there is some deficiency, so that deficiency will be taken from which account? Reserve and surplus. It can be securities premium, it can be any other reserve, whatever reserve available can be used to write off such debit balance. Understood? Correct. So this is only when such circumstances arises in the question. So you will be able to understand by preparing which account? Capital reduction account. This much we have done. This much we have done. Now let us come to one homework question. I have given question number 5. Let us read. Correct? Let us read. Weber Limited gives the following ledger balance as at 31st March 2001. You can see property, plant and equipment, investment market value 19 lakh, book value 20 lakh, current asset, then debit balance of PL account. In this chapter, always debit balance of PL account. Correct? Yes, sir. Then share capital equity shares of rupees 100 is 6%, cumulative preference shares of rupees 100 is 5% debenture creditor provision for tax. Now, let us read and pass journal entry. I said one by one will take, but first you just find out what they have asked. Pass journal entry. I have said sometimes they say what? Prepare account. 99% they will ask what? Journal entries. But there is 1% chance they may ask account also. And if they have asked account and you have drawn journal entry, 0 marks. Anda. Okay? Got it? So be careful about that circumstances. So let us read one by one. I hope you have done. Can you help me? You need to help me. Okay. So first, all the existing equity shares are reduced to rupees 40. Means the face value has been changed from 100 to 40. Can you give me the journal entry? So we are doing. Let me write down. You are very fast. I know you are champion, but I am not champion. Books of which company? Correct. If you have not done, write with me. Okay. Vaibhav Limited Journal. You can start writing. Correct. So what is the point number 1? Equity share capital rupees 100. Account debit to equity share capital rupees 40 na 40. So how much it is amount? It is 2 crore. Sorry. It is 2 crore na. So it is 2 crore means become how much? 80 lakh. Very good. The balance will be transferred to which account? Now if I am not writing narration, so narration will be your homework. That you can write down 1 crore 20 lakh. Super. Correct. Are you understanding? थोड़ा 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 only. Okay? Not much. Okay? Okay. Then coming to the next point, what they have given, all preferences are reduced to 60 each. So it means 100 will become 60. Can you do? So it is 6% cumulative preferences. Okay. So point number 2, 6% cumulative preference capital of rupees 100. What is the amount? 1 crore will now become to 6% cumulative preference share capital of rupees 60. So it will be how much? 60 lakh to what? Capital reduction. Capital reduction. How much? 40 lakh. Very good. Excellent. Got 2 marks. Then next point. The rate of interest on debenture increased to 6%. So rate of interest from 5% will become 6%. This class of debenture changes from 5% to 6%. Then debenture holders surrender their existing debentures of rupees 100 each in exchange for the fresh debenture of rupees 70 each for every debenture held by them. Means face value is also going to change. 100 will become 70. So 30 will be capital reduction. Correct. So can you give me combined journal entry for point number 3? So it will be old debenture how much? 5% debenture of rupees 100. What is the amount? 80 lakh. 2 now it will become what? 6% debenture of rupees 70. How much? So of course, what is the number of debenture? 80,000. So 80,000 into 70 will do. Correct. It is how much? 56 lakh. 56 lakh, and the difference will be transferred to capital reduction account. What do you think? Chapter is very easy. It become 24 lakh. Chapter cannot be easier than this. See, whatever chapter we have done, ESOP, buyback, now internal reconstruction. From examination point of view, super easy. Only you can do mistake in understanding the information, the question. If you do not understand that, then only you can be confused. Otherwise, super easy. Practice also not required, because all the practice we are doing in class only. Because similar type of questions, na. So practice also not much required as it was required in accounting. In accounting, lot of practice was required. Then coming to the next point, property, plant and equipment has to be written down by 20%. Okay. So all reduction of asset will do together. Correct now. So we can reduce. Current asset have to be revalued at 90 lakh. 90 lakh. So what was given current asset? Check करेंगे. What was the amount given? 2 crore. It is 2 crore. So it will be also reduced. Investment are to be brought to their market value. It will be also reduced. One of the creditors of the company to whom the company owes 40 lakh decided to forgo 40% of their claim. The creditor is allotted 60,000 equity shares of rupees 40 in full and final settlement of his claim. Okay. Then taxes and liability will settle at rupees 3 lakh. Okay. It is decided to write down the debit balance of PL account. So can we say this point number 4, 5, 6 we can do together? Correct. One entry. So point number 4 will do. What is journal entry? Capital reduction. To what? To property, plant and equipment. How much reduced? Amount. They have said 20%. So 20% of what? 2 crore 50 lakh, 20% how much? बताओ. 50 lakh. 50 lakh. Then two current assets. So 2 crore is given and is reduced to what? Current asset become 2 crore and is given, it is revalued at 90 lakh. So how much reduction? 1 crore 10 lakh. And there is one investment also. Well, investment is reduced to what? Its market value. So let's see what is the market value given. It's given 19 and book value is 20 lakh. So 1 lakh reduction. 1 lakh reduction. What is the total? It will become 1 crore 61 lakh. You can add on being asset reduced. Being asset reduced. No, no, no. One doubt has been asked, sir. It is given the question that market value is 19 lakh and book value is 20 lakh. Correct. But if the information is not given about writing off, should we write off? Should we write off? That is the question. Just try to understand. We write off only when given the question. Normally, when such point is given, they will inform you. They will inform you. Correct now. They will inform you about that point. Or you can write off by giving a note. Correct? Yes. But they will always inform you. Don't worry. Whenever you are asking doubt, raise your hand. ठीक है ना? Whenever you are asking or raise your hand, I will only ask what is your doubt. ठीक है ना? Don't panic. No, no, of course AS 13 is not applicable. AS 13 is not applicable. So we are not applying AS 13 here. We are applying the information given the question. In this chapter, basically, all the information to be written up is given in the information wise. Whatever is informed, that only we do. Correct now. It might happen it is they have not decided to write off. They have not decided to write off that. Correct now. So normally they will inform you about that writing off. Or if you want to write off, give a note that we have assumed that it need to be written off. Correct? But they will inform you, don't worry. Then one of the creditor of the company to whom company owed 40 lakh decided to forgo 40% of his claim. So they decided to forgo 40% of his claim. Okay. The creditor is allotted with 60,000 equity shares of rupees 40 in full and final settlement of the claim. In full means can I say out of 40 lakh, 40% reduced, and for 60% what we are giving equity shares. Understood? So in full and final settlement. So what they want to say? Creditor account debit. Point number 5, creditor account debit. What is the amount? 40 lakh. Understood? To how much reduced? It is 40% reduced. So 40% becomes 16 lakh, and for balance they are demanded what? Equity share capital of rupees what? Of rupees of new class. So already you have seen that 100 rupees has become what? 100 rupees has become what? 40 rupees. So always a new class of shares will be issued, even though not specified in the question. Even though not specified in the question. So how many shares they have allotted? 60,000. So 60,000 into what? 40 is equal to what? So you can see it become total 40 lakh, means we are doing correct only. Understood? This type of information is normally given in the question. Good point. Yes, sir. Done. Then taxation liability is to be settled at rupees 3 lakh. So you can see there is one provision for tax given 2 lakh. It is settled at 3 lakh, means more payment, more payment. So what journal entry will do? Point number 6, provision for tax. How much? Provision for tax how much? 2 lakh. Now, one doubt will come, sir. It is given provision for tax is settled, but whether it is paid, means whether it is paid or not paid. So it is not clear with the question whether it is paid or not paid. It is not clear with the question. So you can take assumption in exam. You can take assumption exam. If you assume not paid, then you write down to income tax payable, because now it is not an estimation now. Income tax payable become how much? 3 lakh. And there is what? A loss. Loss will be debited to which account? Capital reduction account. How much? Suppose you assume it is paid, then you can pass one more journal entry, income tax payable account debit bank. Understood? So because it is not clear whether it is paid or not paid, you will take assumption. I don't know what assumption has been taken by institute. Let's see what they have assumed. Check kar lete hain. So you can see provision for tax to liability for taxation means what? Income tax payable means they have also assumed not paid. To will make a rule, if it is given settled and nothing is given, we'll assume it is not paid. So income tax payable and liability for taxation account are same. Got it? Have you understood this point? Have you understood this point? To write down, it is assumed that, always will assume this only. It is assumed that income tax is not yet paid. Means this income tax payable will come in balance sheet. Got it? Have you understood this point? If paid given the question, then we'll pass one more journal entry, income tax payable account debit to bank. Okay. Then next point. It is decided write off the debit balance of PL account. That is understood. So point number 7 is what? Capital reduction. Capital reduction. Account debit. How much? What is the debit balance of PL account? Debit balance of PL account is how much? 12 lakh. So it is 12 lakh to what? PL account 12 lakh. All journal entry done. At the end, what you will do? You will close which account and find out the balance. Can you find out the balance of capital reduction by doing in calculator only? Credit will be credit, debit will be debit, then credit minus debit. Can you give me what is the balance of capital reduction account? 26 lakh surplus balance? Surplus. That surplus balance will be transferred to which account? The last entry is capital reduction account debit to capital reserve. How much? 26 lakhs. Correct? 26 lakh is correct. Okay, sir. Now let us prepare what? Balance sheet. The balance sheet we are preparing only for practice. Balance sheet of which company? Vaibhav. What we should write down after the name? Always you should write down, okay? If you are not writing, they may deduct marks. As at. Do you know the date? Can we start? Date is given. Whatever date is given, that only write down. How much? 31st March 2000, 2011. Can we start? Balance sheet will not take much time. Can we start? 1. Equity and liabilities. Under this 1, shareholders fund. Under this point number 1, share capital. Share capital. Whenever you are doing journal entry, you need to just see what? Your journal entries. So can I say, what is the new equity share capital? How much? New equity share capital how much? How much? 80 lakh? Bolo. No, no. New equity share capital how much? 80 lakh. Then new preference share capital how much? 60. 80 plus 60 how much? 140. 140, and there are some equity say issued to the creator. How much? 24 lakhs. So 140 plus 24 means 164 lakhs. You can do in this way now. Just give note number 1. 1 crore 64 lakhs. 1 crore 64 lakhs. Understood? Then point number 2 is what? I have already said only one reserve will come. Which reserve? So how much capital reserve? Note number 2, 26, 26 lakh na? 26 lakh. Yes sir. Right. Then point number 2 is what? Non-current liability. In that what we write down? Long-term borrowing. And we have what? Now 5% debenture become what? 6% debenture. You can add on here only 6% debenture. How much? It is 56 lakh. Then we write down point number 3, current liability. Current liability में first what we write down? There is no short term borrowing, but there is one credited trade payable. Trade payable. So how much trade payable has given in the question? You can say creditor 1 crore. Out of 1 crore 40 lakh is now over. So 1 crore minus 40 lakh how much? 60 lakh. 60 lakh, and there is one more liability will come, that is other current liability. Why? Other current liability, that is income tax payable. You can add on income tax payable how much? Income tax payable is equal to 3 lakh. Very simple. Can you give me the total? Three crore 9 lakh. 3 crore 9 lakh. Let us come to the asset side. Assets. Point number 2. In this point number 1, first what we write down? Non-current asset. Correct? Follow. In this first what we write down? Property, plant and equipment. The property, plant and equipment will be how much? So 50 lakh reduce out of 2 crore 50 lakh, it become 2 crore. Then we write down non-current investment. Whenever question is silent, always assume investment is non-current investment. Whenever question is silent, always assume investment is non-current investment. Correct? So it will be 19 lakh, na? 19 lakh. Then I think there is only current assets. How much current assets? Current asset is reduced by how much? Well, बताओ everyone. Current asset is reduced by how much? बोलो. It is revalued at 45 lakh. Array, not responding. Sorry. We are doing which question? Question 5 na. Sorry. Question 5 we are doing na. Yeah. 90 lakh in balance sheet. So it is given current asset how much? 2 crore. And is reduced. It is revalued at 90 lakh. So it will come 90 lakh only. I think all item written. Just make the total. Total. Balance sheet tallied. मुबारक हो. मुबारक हो ना. So 3 crore 9 lakh. Very simple. Yeah. Follow. Now, I've already said that notes to account, if you have time, you can prepare. If you don't have time, you can ignore also. Correct now. But if you have time, you can prepare for share capital and reserve and surplus. Okay. That you can do. Normally, I have seen that in the suggested solution, they have also given a working note for capital reduction account. But can is without working note also we can do it? But because ICI is giving and working note for capital reduction account, can you prepare it in every question? In every question, even though they have not asked capital reduction account, prepare it for getting what marks. चलेगा? Yes, sir. So let us prepare in this. Can the gain will be credited and loss will be debited. Simple. So can you give me first transaction by equity share capital how much? 1 crore 20 lakh. Then we have buy 6% preference share capital. How much? 40 lakh. Correct? Then what? Hello? Debenture. Let them buy 5% debenture. How much? 24 lakh. Then what? Then there creditor. Buy creditor. How much? 16 lakh. Then asset will should write down. To what? Property, plant and equipment. How much? 50 lakh. Then to current asset how much? 1 crore 10 lakh. To investment how much? 1 lakh. Then I think PL account is here. To PL how much? PL 12 lakh. And there is one provision for tax now. To provision for tax how much? 1 lakh. Done. The surplus will be transferred to which account? Put it on to capital reserve. How much? 26 lakh. In this way we can prepare. Simple. Done. Can we come to the next question? Question number 6. Let us read it. Yes, sir. The balance sheet of A and Company Limited as at 31st March 2002 is as follows. You can similar balance sheet is given. Share capital reserve and surplus, long-term borrowing, trade payable, short-term borrowing, other current liability, PP, intangible asset, non-current investment, inventory, trade receivable. Then they have given what? The notes to account, equity share capital of rupees 10, preference share of rupees 100, debit balance of PL account, long-term borrowing, 6% debenture secured on freehold property. So debenture is secured on what? Freehold property. Then other current liability, there is what? Loan from directors, okay, and interest payable on 6% debenture. Other current liabilities, loan from directors and interest payable on 6% debentures. Property, plant, equipment, freehold property, plant, intangible asset, goodwill, patents. Correct? Goodwill may give star mark. Goodwill star mark. Goodwill need to be written off even if question is silent. Non-current investment at cost. Means many items are there. Means in this question there will be a lot of adjustment. Correct? Court approved a scheme of reorganization to effect on 1/4/2002. Point number 1, the preference shares to be written down 275 each and equity shares 2 rupees to each. 1 second, similar transaction. Correct? Let me first check whether they have asked what? Journal entry. You are required to show journal entries. So can we start doing journal entries? You will do, I will do. You will do. So what I will do? You will do, then I will be silent. So you need to help me. Okay. Chal na. I am also practicing for my next batch. You practice for your exam. I am practicing for my next batch. You practice for your exam. Both are what? Same. Chalega? Okay. So question number 6. Books of A and Company Limited. Now one doubt you have not asked. What is the doubt? Common doubt. Is of a balance sheet you are saying that after name of the company write down and reduce. But why in journal entries you are not writing? Understood the doubt? Means in balance sheet after the name of the company we are mentioning what? And reduce. But in journal entry we are not mentioning. One doubt should come. Bole yes or no? Not come. Doubt should come or not? As a student, doubt should come or not? Doubt should come. What I am saying, that doubt should come. If doubt is not coming, means you are not reacting. You are not reacting. You are only doing copy paste. Correct now. So you should not do copy paste from the code. You should also think why this, why not this. This type of approach you should follow. Next time I will not create doubt. You need to create your own doubt. Okay. So already he has given the answer that and reduce is required for financial statement, and journal entry is not a financial statement, it is a books of account. So we will add and reduce in the published financial statement. Understood? Correct. That is the reason we are not mentioning and reduce after the name of the company. Chalega? Yes, sir. Can we start the first transaction? Okay. I'm waiting. You can start. You can start. Everyone can start. Okay. Chal. Now let us do. I hope you have also started. Now point number one is what? The preference shares to be written down to 75 each and equity shares 2 rupees to each. Means what is the face value of preference shares? You can see 100. So 100 will become 75. And what is the face value of equity shares? 10. 10 will become 2. Correct? And the difference whatever is there, that will be transferred to which account? Capital reduction account. In this chapter, whatever difference is there, that is always transferred to which account? Capital reduction account. A new account in your life. A new account in your life. So can you give me the journal entry point number one? Preference shares. What is the rate of preference shares? Can you give me? It is 6%. 6% na? 6% na? So can you say 6% cumulative preference share capital of rupees what? Of rupees 100 each will be debited. So what is the amount? Amount is what? 4 lakh. 4 lakh means how many shares? 4,000 shares. Now it will become what? To 6% cumulative preference share capital of rupees what? Of rupees 75 each. So it means 4,000 into 75. So 4,000 into 75 means how much? 3 lakh. It means the paid up capital from 4 lakh become how much? 3 lakh. So difference is what? 1 lakh. 1 lakh will be gain. The gain will be transferred which account? Capital reduction account. Thora you have understood? Those who are new. Capital reduction account. Yes sir. We are understanding. Whenever I used to do my CA course na, so I was like you only. I was not exceptional na. Every student are same. When I was student, I was just like you. Any of the, do you know any chartered accountant in your family? Means anyone is, you have some CA in your family? Who is that? Your Hua? Means your cousin. Your cousin? So when he became CA, 2000 means newly chartered accountant. You just ask him, when you were studying, what was your approach? He will say, I was like you only. Everyone is same. Everyone is same. So when I was student now, when I was student, so what I used to do, that we need to understand. Correct? What I used to do, that if suppose I am not understanding, if suppose I am not understanding the concept, I am not understanding the concept, but I have understood the journal entries. Means right now those who are new, they have understood journal entry, but you have not understood the concept. That is the thing. So what you should do? You should give star mark. You should give star mark, but don't panic because all are same. Correct now. Don't panic because you have understood journal entry. हो सकता है कि you are understanding, but actually the concept you are not understanding why we are doing that. So just give star mark whenever you have time, whenever you have some other person, you have your faculty, discuss that point with your faculty. Understood? Correct. So even though suppose you have done one chapter, fully you have done the chapter, but then also it might happen some conceptual understanding is not coming. Means you are able to do the sums because solution is given. You'll be able to understand the solution, but then also you are lacking what concept. So why we are doing so? So just give star mark, and whenever I am with you, ask me that question. So that will be your fun. That will be the rule. Every concept need to be asked. Okay? Yes, sir. So point number two. Same thing for equity share capital will do. So equity share capital of rupees what? Equity share capital of rupees what? 10. What is the amount? Can you give me? 7,50,000 means how many equity shares? 75,000 equity shares. Correct. Now it will become of rupees what? 2. So we write down 2 what? Equity share capital of rupees 2. So 2 equity share capital of rupees 2. It will become 1,50,000 and balance will be reduced. And that will be transferred to which account? Capital reduction account. Already I said narration will be your homework. Means in exam narration is must. In class we are not writing narration because it is repeated narration. Correct? So bar I am saying narration is must. Don't blame me if the marks is deducted in exam. Correct? I will not write because I am C na. You need to write down. Okay? So this is how much? 6 lakh. Yes sir. You can add on small narration being equity share reduced. Chalega. Now coming to the next point. Of the preferential dividend which are in area for 4 years. So last class I have said that area of preference dividend is what? Contingent liability if you remember. So any area of preference dividend is an example of contingent liability because that dividend is not yet declared. So whenever declared, company has an obligation to pay, so it become a contingent liability. So what is contingent liability? We'll do in detail when I will do AS 29. When I will do AS 29, then I will do in detail what actually contingent liability means. So of the preferential dividend which are in arrears for 4 years, 3/4 to be waived and equity shares of rupees 2 is to be allotted for the remaining quarter. Quarter means 1/4. Quarter means 1/4. So can we first we need to calculate means we are doing point number 3. So what is preference dividend? What is the total preference dividend? Okay, total preference dividend will be how much? It is 4 lakh capital. What was the capital? 4 lakh. What is the rate of dividend? 6% and it is area for how many years? 4 years. What is the amount? 4 lakh into 6%. How much? Everyone calculate. 4 lakh into 6%. 24,000. For how many years it is area? 4 years. So multiplied by 4. So what is the total amount? 96,000. Now what is given out of this 96,000? 3/4. 3/4 means what is the amount? Into 3 divided by 4 means 72,000 is waived. Waived means what? Cancelled. It is waived. Correct. And 1/4. 1/4 means how much? 24,000. For this what is allotted? Equity shares is allotted. Correct. So last class we discussed that contingent liability if it is waived then no journal entry. So it is not recorded, it is cancelled. So what is journal entry pass? No journal entry. So for this no journal entry, but for this we need to pass one journal entry. So can you see if you are paying preference dividend that become an expense, the expense will be debited. All in this chapter, all expense means whatever you are debiting is to be debited in which account? Capital reduction account. So all expenses, all losses will be debited which account? Capital reduction account. All income, all gain will be created which account? Capital reduction account. This is the rule of this chapter. Correct? Yes sir. So what about journal entry? Journal entry what? Capital reduction account debit. Nalak. Nalak. I said what is allotted? Equity shares na. So 24,000. So the 2 equity share capital of rupees how much? Of rupees 2. Excellent. So what is the number of shares? It is number of shares means what? 12,000 na. So of rupees 2. Always new class will be allotted. Okay. So 12,000 into 2. Why I am writing this? Because you require number of shares for preparing balance sheet also. Correct. Journal entry understood. Simple. Correct. Yes. This also you have understood. Point number 2 done. Let us come to point number 3. Interest payable on debenture to be paid in cash. So it means there will be some interest payable. Let's see whether interest payable is here. Yes, interest payable on 6% debenture is 22,500 and is paid in cash. You will pay it. What is journal entry for payment? So point number 4. What is journal entry? Interest payable on debenture. What is the amount? Interest payable on debenture how much? 20 to what? To bank 22,500. Simple. Correct? Yes, sir. This also you have understood. Come to the next point. Point number 4. This is what very, I will say, favorite point of the institute. Normally they give to confuse you, and what I say think that you will do mistake in such point. Correct? They have that belief that you will do mistake, therefore they normally ask this type of point. What is it given? Debenture holders agree to take over freehold property, book value of rupees 1 lakh at a valuation of 1,20,000 in part repayment of their holding, and to provide additional cash of rupees 1,30,000 secured by floating charge on company's asset at an interest rate of 8% per annum. Have you understood? English means what I said in this chapter. You will do mistake when you not understand the information. Means English information. You know we are good in English. क्या बोलना रे? We all are very good in English. Correct? So we can understand. So you need to understand by your own. Just read it twice and explain what they want to say. If you have understood, raise your hand. Well, any other explanation? Anyone who want to give some other explanation? Chalo. Now what I will inform you. I will inform you how to read English. English is a very funny language. If you do not understand how to read, you will misinterpret. I already said if you do not understand the information, then only you can do mistake in this chapter. Otherwise, this chapter is lollipop. Correct? Let's see. Now, you know one point in English, and is what? What does and mean? And means it is used to add two sentence. Means two sentence can be added by using and. Correct? It means up to this one information, after this one information. Let us read separately, then you will understand. First, debenture holders agree to take over freehold property whose book value is 1 lakh and whose current value is 1,20,000 in part repayment of their holding. Means for their part payment, they have taken freehold freehold property of value current value 1,20,000 whose book value is what 1 lakh. Correct? Means can you say first the freehold property we need to increase from 1 lakh to 1,20,000, and then this 1,20,000 will be given to whom? So my question to you all, the claims of debenture holders will be reduced by 1 lakh to 1,20,000. 1,20,000 first sentence you have understood. In part repayment means if you see what is the total debentures. Debentures is 3,75,000. So 3,75,000 minus kitna karna? 1,20,000. How much left? 2,50,000 left. 2,50,000 will come in the balance sheet if it is not paid. Correct? Now second part. Second part, let us see. What given? And to provide. And to provide means debenture holders to provide. Means debenture holders agreed to provide. We read it like this now. Debenture holders agreed to provide additional cash of rupees 1,30,000 secured by floating charge on company's asset at an interest rate of 8% per annum. What they want to say. Second part you will explain now. I have read. The debenture holders agree to provide additional 1,30,000 in cash secured by floating charge on all assets at an interest rate of 8% per annum. What do you want to mean? Bata? Means debenture holders will provide cash to whom? Company. And for this cash, what will be issued? A new debentures will be issued at an interest rate of what? 8%. Means can I say it is issue of new debenture? And that debenture will be secured by floating charge on all assets. For security, we don't pass any journal entry. Only a disclosure is required. Two part ho gaya. Understood? Correct. So what I have said, if you want to understand a sentence of this nature, always read separately. Then only you will be able to understand. Otherwise, you will be confused. Correct. It means, can I say in this transaction means if I say point number 5 we are doing for debentures. So in this, what are the transactions given? First, freehold property will increase from 1 lakh to 1 lakh 20,000. What journal entry? Freehold property account debit to what? Capital reduction. Gain na? By how much? 20,000. 20,000. Got it? Correct. Then this freehold property is taken over by debentures. It means debentures will be reduced. So 6% debenture will be now debited and 1,20,000 will be reduced and they will be given what? Freehold property. Freehold property 1,20,000. 1,20,000. Got it? Got it? And then company will receive cash. Bank account debit how much? 1,30,000. And company will allot what? New debenture at a rate of 8%. New debentures will be issued. New debentures will be issued 1,30,000. Understood? Have you understood? You can also compound this journal entry. In compounding, so you are expert. In compounding, you are expert or not? You can compound. Achha, these two journal entry, so we can compound. Bole yes or no? So if suppose you want to compound this journal entry, what journal entry you'll do? Bata. 6% debenture how much? 1,20,000. To freehold property what? 1 lakh. And the difference will be transferred to capital reduction. You can do in that also. That way also. I think ICI has given that journal entry. Check करेंगे. What ICI has given. Check करेंगे. No, they have used. अच्छा, they have combined one more point. चलो ठीक है. This so you have understood. There is one more point they have combined that also. In this any doubt? अच्छा. We can compound these two journal entry. Freehold 6% debenture 1,20,000 to freehold property 1 lakh and the difference will be transferred to capital reduction that is 20,000. Can we read another point now? What is that? Yeah. Now, pattern and goodwill to be written off. We write off pattern and goodwill. Okay. Inventory written off by 65,000. We write off that also. Amount of 68,500 to provide for bad debt. Means we need to create one provision for doubtful debt. That also will do. Remaining freehold property after giving to debenture holders to be revalued at rupees 3,87,500. Means once again they have given 1 point for what? Freehold property. So let me do first this. Can I do this first? Point number 8. Bool. So what they have said? Check करेंगे. Point number 6. बताओ. What is freehold? What is the total freehold property given? What is the total freehold property given? 4,25,000 now. 4,25,000. Out of these, how much taken over by Debenture holders. 1 lakh, 1 lakh. What is the book value? Because this is book value, so you will also deduct book value only, na? Correct? So what is the remaining pre-owned property? It is 3,25,000 and it was revalued at what? It is given remaining pre-owned property is revalued at what? So 3,87,500. It means how much increase? How much increase? 62,500 increase. So this is gain, and the gain will be transferred to what? Capital reduction account. So you can also do this journal entry together with this if you want, because this was also gain, na? So you can totally pass one journal entry with this amount, or you can pass separate journal entry your choice. Correct now. So that will not make a difference in marks. Don't worry. Let us do one journal entry for this. What will be journal entry? Freehold property account debit. Freehold property account debit. To what? Capital reduction account. 62,500. Got it. Now let us reduce whatever they have given all assets together. Can we do together? Point number 7. Capital reduction account debit. बताओ. Patent and goodwill to be written off. So how much patent? To patent how much? 37,000. Then to goodwill how much? 1,30,000. Correct. Point number 5 done. Then point number 6, they have given inventory written down by 65,000. So how much inventory reduced? Inventory to be reduced by means this is the amount of decrease, na? So 65,000. Be careful with the word to and by. Sometimes they say inventory is to be reduced 2 rupees and by rupees. I think you know the difference between 2 rupees and by rupees. 2 means that is a new amount. By rupees means it is the amount of decrease. Then amount of 68,500 to be provided for bad debt. Written 2. Provision for bad debt. How much? 68,500. Then point number 8 we have done. Point number 9, investment to be sold. So sold to will do separately. Okay. So what is the total? Can you give me the total of this? How much? How much makes you? 2,95,000. So it is 2,95,000. Okay, sir. Got it. You throw your calculator. Throw your calculator. It is 3,01,000. Okay. Correct. Chalo. This point also you have understood. Then point number 9, investment to be sold for rupees 1,40,000. So what is the next journal entry? With the sale journal entry, bank account. What is the sale price? 1,40,000. What is the book value of investment? What is the book value of investment? 55,000. So there is a gain. Gain how much? Gain is 85,000. This gain will be transferred to which account? 2PL. 2PL na? 2PL na? To capital reduction in this chapter. Means if you see the last chapter buyback, we have done the same journal entry. Sale of investment. But in that chapter it was transferred to PL. In this chapter we'll never apply accounting standard. We'll never apply any Companies Act. Every gain, every loss will be transferred to which account? Capital reduction account. Okay. The next point, director to accept settlement of their loan as to 90% thereof by allotment of equity shares of rupees 2 each and as to 5% in cash and the balance 5% being waived. So there is, I think, director's loan given somewhere. Loan from director 1 lakh. So point number 8. Loan from director. How much amount? What they have said for 90%, what they want? Equity share capital of rupees 2 each. Means, can I say 90% means 90,000 divided by 2. So how many equity shares will be allotted? 45,000 into 90,000. And 5% paid in cash. So 5% paid immediately bank. Bank is how much? 5,000. And balance will be waived. The balance will be transferred to which account? Capital reduction account. Okay, sir. Super easy. Super easy. Whatever given, we are adding that. Simple. Bolo. Yes, sir. This also you have understood. So directors point number 9, point number 10 also you have understood. Point number 9, once again favorite point. Favorite point. Normally this point will be also in your exam question. They were capital commitment totaling rupees 2,50,000. This contract are to be cancelled on payment of 5% of contract price as a penalty. Now first I need to explain you what is capital commitment. What is capital commitment? Correct. Now any contractual commitment which is not recorded, that is known as capital commitment. For example, I have given a commitment that I will purchase a plant and machinery after 5 years. That is a contractual commitment. But can I say that will be purchased after 5 years now? We will not recognize any liability right now. So as per the requirement of Schedule 3, this commitment need to be disclosed. But these are not contingent liability. These are not contingent liability. So we have done some contractual commitment. Suppose I have given one commitment to you that I will teach CA final also to you. So one commitment given. So this is a commitment. So this commitment need to be disclosed because it will not be recognized right now. It is only a commitment given. Correct? Understood. Now in this chapter, if such commitment is cancelled, so it may require a payment of penalty. If there is a payment of penalty, that become an expense and that expense will debited to which account? Capital reduction account. Means contract cancelled, you will not pass any journal entry for cancellation of contract because that contract was not recognized only. But for cancellation of contract, you are paying what? A penalty. For payment of penalty, you will pass my journal entry. Understood what I am saying? So payment of penalty 5%, 5% of contract price. So 5% of contract price means 2,50,000 into 5%. How much? So it is 12,500. What journal entry you will do? Capital reduction account debit to payment done na. It is given now. This contract are cancelled on payment. Means you will pay the amount. So to bank. Simple. Simple journal entry. So point number 9. What journal entry? Capital reduction account debit to bank. That is how much? 12,500. It is 5% of 2,50,000. Then these are done. Then last transaction. Ignore taxation and cost of the scheme. Ignored. We have ignored. You are requested so journal entry done reflecting the above transaction including cash transaction and prepare the balance of company after completion of the scheme. So we'll prepare balance sheet. But at the end, what we'll do? Always whenever you have done this, 2 point you should think immediately whether we have whether we have done the writing of journal entry for debit balance of PL account and goodwill and fictitious asset. You can see goodwill we have written off, but what we have not done till now, we have not we have not done the writing of what debit balance of PL account now. So that need to be done by our own. Even though question is silent, even though question is silent. So point number 10, capital reduction account debit, because this is the objective of this chapter. Even though question is silent, we should write off what the debit balance of PL account. So how much debit balance of PL account in this question? It is 5,35,000. And now can you give me the balance of which account? Can you give me the balance of capital reduction account? Do in calculator. In exam you can prepare account. In class we'll do in calculator. I will suggest you to write with me. Okay, when you write now you think. When you don't write, you don't think. Okay, na? Write with me now. You write again. So this is a writing fair only. Because when you write, you think. When you don't write, don't think. You think about someone there. Okay. Okay. How much? So you are not sure about the balance. Bolo. Zero. 100% correct. Zero. If it is zero now means you are doing 100% correct. Because I have already said either it will be equal to, means the surplus amount will be either it will be there will be surplus or zero. If it is coming zero means you are doing 100% correct. There is no need to recheck also. Correct. So in this question it is coming zero, so no additional journal entry. If it is coming surplus, then surplus will be transferred to which account? Capital reserve account. Got it? Done. Done. All journal entry done. Can we prepare balance sheet fast? Balance sheet, why I am preparing? Only to inform you how to prepare balance sheet. More and more balance sheet you are preparing, more and more practice is done. Correct? So balance sheet of which company? It is A and company. What do you write on and? Reduced. As at which date? Date was given 1/4/2002. Can we start? Can we start? Point number one, what we write down? Equity and liabilities. Under that, first what we write down? Shareholders fund. Under this first what we write down? Share capital. Share capital. Understood? Now, whatever I'm asking, that only you say. What is the new equity share capital? See the journal entry. What is the new equity share capital? Amount, total amount. Always give me the rate. Don't calculate rate. Calculation we can do. What I am saying, how to do in this way. Check करेंगे everyone. How to calculate the amount. So you will take first journal entry. What is the new capital? 3 lakh. So add 3 lakh. Then what is the new capital in point number 2? 1 lakh 50. So 1 lakh 50, 4 lakh 50. Then there are some equity share capital issued. First is for what? You can see for preference shares, how much issued? 24,000. We will add 24,000. Correct. Then I think there is one more transaction where equity share capital has been issued. For which transaction? Director's loan. The amount is I think 90,000. So 90,000 will be added. The total become what? 5 lakh 64,000. Write down 5 lakh 64,000. Understood what I am saying? 5 lakh 64,000. We'll give note number 1. Then point number 2 is what? Reserve and surplus. So in this chapter, reserve and surplus, only one account will come. Which account? Capital reserve. But in this capital reserve is 0. There is no capital reserve. 0. Because there was no surplus. Then point number 2, we write down what? Non-current liability. Non-current liability. Correct. In this we write down point number 1, long-term borrowing. So we have long-term borrowing, but now there are two debentures. Correct. There is two debentures now. Bolo yes or no? So there was one debenture. How much? 6% debenture. So out of 3,75,000, how much paid? 1,20,000. How much left? 2,55,000 left. And what is the new debenture issued? 1,30,000. So plus 1,30,000. It is coming how much? 3,85,000. We can add on 3,85,000. In this also a note will be required. Why? Because there are two debenture in this. Understood this? Bolo. Have you understood? Coming to point number 3, current liability. Current liability. Yes, sir. So in current liability, we have first trade payable. Can you see we have not done any journal entry with trade payable? Means trade payable remain same. Means trade payable remain same. So trade payable, how much? 3 lakh. No changes. Yes, sir. Then they have given short term borrowing. Okay, so no changes in short term borrowing also. There is one short term borrowing given bank overdraft. अरे बोलना रे. Short term borrowing given bank overdraft. Understood? बोलना रे. Correct? Just write down. Then I will inform you something about this. Just first you write down. Short term borrowing is 1,95,000. Then point number C is what? Other current liability. Other current liability. We need to find out what are other current liability. Check करेंगे the notes to account. Loan from director become 0. Interest payable on debenture also become 0. We have two other current liability. One is loan from director, that becomes 0. And interest payable on debenture also become 0. So we write down 0 only. Correct. This also done. Correct. अरे बोलना रे. Right now don't make total. I just want to inform you some point. Don't make total. Then coming to point number 2, assets. Point number 2, assets. First what we write down? Point number 1, non-current asset. Under non-current asset, first what we write down? Bolo? Property, plant and equipment. So property, plant and equipment, of course, It will come. So guys, property, plant and equipment, what are given, check करेंगे first. There is one freehold property, one is plant. Plant remains same. The plant, there is no changes. So 50,000 will come as it is. But freehold property, there were two freehold property. One is given to whom? Debenture holders, and other is revalued. So freehold property, the balance, whatever is left, is revalued at what amount? 3,87,500. We'll add 3,87,500. What is the total property, plant and equipment? How much? 4,37,500. Are you able to understand what I am doing? Correct. Intangible asset become zero. Both patent return off, goodwill return off. There is no need to write down. Then we have non-current investment. So non-current investment is also sold. Investment is also sold. So it also become investment also sold, na? We have sold it, na? Investment also sold. So it will also not come. So only non-current asset may only property, plant and equipment will come. Now we'll come to what? Current asset. Current asset. Current asset means inventories. Have you done any journal entry for inventories? Inventories, what you have done? So reduction of 65,000. It become 4,25,000 minus what? 65 is equal to 3,60,000. Thank you very much. Yes, sir. Then we have trade receivable. So trade receivable also we have created what? One provision. So provision for bad debt. How much we have created? That is 4,85,000 minus how much? 68 na? 68,500. It is coming 4,85,000 minus 68,500 is equal to 4,16,500. Got it? Correct. Now, one special point. Everyone, just try to understand. Everyone. In this question, they have not given cash and cash equivalent, but there is some payment. There is some payment. बताओ, from where we will pay? That cash is not there. Understand what I am asking? Means we need to pay now. It means, can I say, in this question, this bank overdraft, this short term borrowing is actually current account in which we can have overdraft balance. Are you getting what I am saying? It means, can I say this is a credit balance of bank account? Credit balance of bank account now. And this need to be changed now. Have you understood what I am saying? It means this was actually wrong. I was knowing this point, but intentionally I have not said. So normally what happens, sometime both are given. Bank overdraft is also given. Cash and bank balance is given. If both are given, then okay. Then you are using cash and bank balance for payment. But if cash and bank balance not given, only bank overdraft is given, it means that bank overdraft is nothing but credit balance of bank account. Understood? Means what I want to say, I will give a note for this. First we'll prepare one account, bank account. We'll prepare working note, bank account. बताओ. They have given credit balance now. They have given which balance? Credit on buy balance brought down. How much given? Short term borrowing, how much given? Okay. 1,95,000. Then can you give me all the transactions related to bank? One by one. All the transactions related to bank. Investment sold. We read on two investment. But it was sold at rupees what? So 1,40,000 will come. Then what? Debentures. Acha, additional cash received from debenture. So 8% debenture. 1,30,000. 1,30,000. Then what? Penalty. Return by payment is there now. By capital reduction. And you can write down this is paid for what penalty? You can write down this is paid for penalty. By giving an hyphen, you can write down paid for penalty. How much? 12,000. Any more payment or receipt? Interest paid. You can add here only as interest paid now. You can add on buy interest on debenture. How much? Buy interest on debenture. What is the amount? 22,500. Any more? It was also paid now, 5,000 paid. So buy loan from director. How much? 5,000. Any more payment or receipt? I think done. Can you give me the balance now? So now it may have credit balance or debit balance depending upon the situation. What is what I am saying? How much? 35,000. Debit balance or credit balance? Means positive balance, negative balance. Positive balance, na. We write down by balance brought down 35,000, and this will come in now cash and cash equivalent. So you can see your current liability now become what? Cash and cash equivalent. Understood what I am saying? Have you understood what I have done? Initially, I have written in bank overdraft. That time I was not doing cash and cash equivalent is there or not. But we found there is no cash and cash equivalent. So I have changed my change. We need to change our answer now. So that's why we have done this calculation. So now, can I say we need to deduct means can I say this will become zero? Bank overdraft will become zero, na? There is no short term borrowing, and this will become what? Cash and cash equivalent. Point number C. Cash and cash equivalent. How much? 35,000. And now you can make total. Your balance sheet total will tally. What is the total? Twelve lakh 49,000. Both side now. Mubarak ho. Understood. Correct. Have you understood what I have done? Means can I conclude from examination point of view? Just write down one note. Just write down student note. This is for your understanding. Student note. What happened? Done some mistake. Okay, na? Chalo. Just write down one student note. Now, write down. If balance sheet if balance sheet have bank overdraft and cash equivalent both. Understood? Then down cash and cash equivalent will be used for all payment and receipt. Understood this point? Have you understood this point what I have said? If you have both bank overdraft and cash equivalent in balance sheet, then bank overdraft will remain as it is. You use what? Cash and cash equivalent account for all the payment and receipt. Correct? But if balance sheet have only what? Bank overdraft, it means now we need to use which account? Bank overdraft account? To use bank overdraft account for all payment and receipt. Have you understood this point? This is not concept. This is only understanding from examination point of view. Correct? Got it? Got it? So we have done question number 6 also. So means today we have done only two questions, 5 and 6, na? 5 and 6 only two questions we have done. How many questions are there? 7, 8, 9, 10, 11. Oh my god. There are many questions. 11 questions are there. Okay. So we'll take a break. Okay. We'll take a break. We'll meet after break.